African Development Bank and partners to mobilize $520 million for agro-industrial processing zones. Debt Management Office reveals that Nigeria's Eurobond debts rise by $9.37 billion in 5 years. Naira drops to record lows despite banks' issuance of foreign exchange as oil prices remain steady Friday ahead of U.S. jobs data. Details of this and more on Business Express. We're reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. The Nigerian Extractive Industry Transparency Initiative 90 is poised to ensuring revenue accruable to government from the extractive industry remitted as at when due. The agency is ensuring this through collaboration with other anti-corruption agencies, this time with the Independent Corrupt Practices Commission ICPC in Abuja. Benny Adams reports.
The handshake, the pen on paper, binds the agreement that seeks to increase revenue and grow fat the national purse.
Our intervention is nothing more, is to free resources in the extractive industry to support government, have more resources to construct roads, build a transport system for the country, be able to create enabling environment for jobs to flow, tackle insecurity, and then be able to provide enabling environment for citizens of our country to enjoy the resources by all, not just a few.
For both anti-corruption agencies, the Petroleum Industry Act provides better grounds for maximizing the potential in the extractive industry.
We can use such information to improve on the application and the use and implementation of our own statutory mandate. So I think that you can expect maybe stronger bite from this collaboration.
The agreement centers on information sharing, prevention, and prosecution of defaulters in the oil and gas as well as the mining sector. In Abuja, Benny Adams, NTA News.
The federal and state governments have expressed overwhelming support for an initiative by the AFDB to create special agro-industrial processing zones through public-private partnership. The program aims at developing parity value chains through developing infrastructure in rural areas, will focus on finishing and transforming raw materials and commodities. Justin Bem-Uyi reports.
At a high-level briefing session, Minister of Finance, Budget and National Planning, Zainab Ahmed, who hosted the meeting, reaffirmed the federal government's commitment to put in place enabling policies and incentives to attract private sector investment in the zones to ensure successful implementation. Participants, which include representatives of the African Development Bank Group, the International Fund for Agricultural Development (IFAD), and the Islamic Development Bank, provided progress updates on the scheme following their consultations with key stakeholders within the public and private sectors. The AFDB confirmed that it is in collaboration with other development partners mobilizing $520 million to co-finance the first phase of the program in Nigeria and implementation in phases across the 6 geopolitical zones. Director General of the African Development Bank's Nigeria Country Department, Lamin Barrow, said the zones would be rolled out in 18 African countries, including Nigeria. The Nigeria Special Agro-Industrial Processing Zone program consists of 4 mutually reinforcing components: infrastructure development and agro-industrial hubs management, agriculture productivity and production, policy and institutional development, and program coordination and management. In addition to the Federal Capital Territory and 7 states, Kaduna, Kano, Kwara, Imo, Cross River, Ogun, and Oyo participating in Phase 1, several other states have indicated interest in the SAPS program. These include Bauchi, Lagos, Niger, Jigawa, Ekiti, Lagos, Taraba, Benue, Sokoto, Ondo, Nasarawa, Gombe, and Kogi.
A report from the Debt Management Office shows that commercial loans obtained by Nigeria through Eurobonds rose from $1.5 billion as of December 31st, 2015 to $10.87 billion as of December 31st, 2020, indicating a $9.37 billion increase in 5 years. The debt stock remained at $1.5 billion from 2015 to 2016, but rose to $6 billion by 2017, indicating a $4.5 billion or 300% rise within a year. It further rose to $10.87 billion in 2018, signifying an increase by $4.87 billion or 81%. It remained at this figure till the end of 2020. However, the federal government still intends to seek more funding through Eurobonds, which will increase Nigeria's Eurobond debt stock. The DMO said it will speed up Eurobond issuance activities based on the transaction advisor's approval, with the issuance of Eurobonds raising funds for the new external borrowing of 2.34 trillion naira provided in the 2021 Appropriation Act. Meanwhile, reports indicate that many banks are waiting for approval by the Central Bank of Nigeria before they can publish their half-year results. Nigeria's central bank approves audited financial statement of banks before they are published on the Nigerian Stock Exchange, given the bank clearance on how it classifies its own non-performing loans, determines its regulatory ratios such as capital adequacy ratios, cash reserve requirements, among others. It also approves the dividend payments, while the review of company results and subsequent approval are down to instill investor confidence. The delays affect decision-making for some investors. Now, on the currency market, Naira drops to all-time low of 530 against the dollar, while the dollar falls against its major peers. Let's see the exchange rate. The Federal Inland Revenue Service, FIRS, last month told state governments to continue the payment of their value-added tax to it. The FIRS warned that failing to do so will attract penalties. But Lagos State government a few days ago insists it will collect its own VAT based on the ruling of the Federal High Court in Port Harcourt, which says that collection of VAT falls within the jurisdiction of the state government. Well, we will be looking at the issue of value-added tax today on the program. Our guest with me in the studio is a tax expert, Kennedy Iwundu. It's a pleasure to have you join us.
Thank you for having me.
Okay, VAT war left businesses confused. What do you make of it?
Yeah, it's not supposed to, leave businesses confused, because we expected the state government to allow the Court of Appeal have a ruling on it before they go ahead to know whether they will collect the VAT or not. The Federal High Court ruled that Rivers State should collect VAT. And all of us are aware that the Federal Revenue Service went to Court of Appeal. So what we expected the state governments to do, whether it's Rivers State or Lagos State government to do, is to hold on and wait for the Court of Appeal to know whether they will uphold that decision or nullify that decision.
So while they are holding on, who should they pay tax?
No, once they are holding on, the status quo remains. The taxpayer should be paying to Federal Revenue Service.
So why are states now debating this?
It's not supposed to be a matter of debate. From my own personal opinion, the state should not be in a hurry. What they supposed to have done, what they're supposed to be doing now is to wait for the Court of Appeal decision. If Court of Appeal happens to uphold the decision of the Federal High Court, then quickly they can issue instruction to, I know that at that level, FIRS will also like to go to Supreme Court. You understand? Because it involves a constitutional matter. It's a constitutional matter as far as I'm concerned. So in order not to confuse taxpayers, I will advise the state government, both Rivers State government and Lagos State government, to hold on and allow the Court of Appeal to make their own decision.
Okay, you say it's a constitutional matter. What does the law stipulate?
Actually, there's a lacuna, if you ask me to say, because if you look at the exclusive list, the taxes that's supposed to be collected by the federal government, VAT is not listed there. So the states are relying on the fact that since VAT is not listed among the taxes you are supposed to collect, that means you are not supposed to collect VAT. FIRS on the other part say, okay, EU, since the VAT is not listed in our exclusive list, also in concurrent list, is not so listed. So right now, there's no place, no particular level of government where VAT is listed for collection. So what we are saying is that they should allow the Court of Appeal to make a decision on it.
Okay, both Lagos and Rivers states contribute a large chunk of VAT. I mean, could it be the reason why they are actually arguing to get,
That's one of the reasons, because they believe that they have a lot of internal revenue to collect, especially when it comes to taxes. And they believe that they believe in this true call for fiscal federalism. Nigerians have been calling for fiscal federalism, where you allow states to improve their internal generated revenue, run their state without depending on federal allocation, where you don't collect revenue from one state and allocate it to another state. So this is one of the reasons. And another reason is also the constitutional provision. There's no constitutional provision that federal revenue should collect VAT. And that could be another reason they are fighting to make sure that they collect the VAT until that matter is resolved. Okay. Also, we will have a kind of reason where, for example, a state government awards contract and the federal revenue or federal government collect VAT. And the question is that why should state government award contract in their state and federal revenue service will collect the VAT from contract awarded from states? So these are so many reasons why they are fighting to ensure that they collect the VAT. Okay,
I understand that part of the argument is about the collection, collection costs. Will that pacify states? If they get to collect the tax and get the collection cost?
We feel that what will pacify the state is to give, the sharing formula is you get, when you get the VAT, when the federal government collects the VAT, they give FIRS 4% cost of collection. Take 15%, that's the federal government, and share 85% to state and local government, where state has about 50 and local government has 35. I'm sure state will be pacified to say, whatever VAT you have collected from my state, give me back 85% and take 15.
So you mean the law of derivation now?
Yes, because if federal government says, okay, let's continue to collect this VAT, but whatever we collect from your state, we'll give you back 85%. I'm sure it will pacify some states. You understand? Mm-hmm. So that means in some states that don't contribute much, little or nothing to VAT collection, yet they have nothing to share. You understand what I'm saying? So, but another argument is that if federal government is to retain 15% from VAT collected and share 85% to states and local government, why not say state and local government collect your VAT and give me 15% and retain 85%? Okay. That could be a good argument.
Okay, the Lagos state government is actually planning to amend its law towards this particular. How do you see that playing out? Because
Lagos State government cannot amend any law now.
Okay.
The matter is on appeal.
Okay.
You know, the reason why we won't like the state government to ask taxpayers to start paying VAT to state is that what if you ask taxpayers to start paying VAT to your state and Court of Appeal nullify the decision of High Court? You are confusing the taxpayer more by turning back to start paying to FIRS. So they would have allowed all the court processes to be exhausted. And when all of them are exhausted, we now know where we are. And the taxpayers will not be confused. Right now, taxpayers are confused. And they're not supposed to be confused.
But how did this issue travel this far without any challenge until now?
Yeah, you know that VAT decree came in 1993. We have 1993 VAT decree, which later became a VAT Act of 1993 and 2004 as amended. As at the time, military decree came up to say federal and revenue are supposed to collect VAT. People are afraid to go to court to challenge the military dictators, because the VAT that FIRS is collecting today is an act of military decree. The military decree of 1993, which later became VAT Act of 1993 and VAT Act of 2004 as amended. So as at that time, it's difficult for people to go to court to challenge military decree. And over the years, FIRS continue to collect. Then later on, there's taxes and levies approved list of collection, which VAT was also listed under federal collected VAT, federal collected tax. So at that point, it's difficult for people to challenge. So now we are in real democracy. People begin to look at our constitution, begin to look at things, begin to look at fiscal federalism, begin to look at derivation. So they begin to see the loopholes in the law. And that is why it is now coming up.
Okay, are we likely to see more states challenging the FIRS?
No, any victory for Rivers State is a victory for all the 36 states.
Okay.
Yeah, that's it. And if the Supreme Court or the Court of Appeal finally say no, the state should collect VAT, definitely Rivers State should collect the VAT. It means that the whole 36 states should collect their VAT. But I have made a suggestion. VAT is complicated. It's much more sophisticated. It is not something you make a law, say state should collect. My own proposition is simple. Place VAT on the concurrent list. Under that concurrent list, the federal will be collecting, the state will be collecting. Then we now say this is areas federal will collect. This is the area state will collect. For example, federal government can collect VAT on international trade, on cross-border transactions. They can collect VAT on importation and exportation. They can collect VAT from non-resident companies, foreign companies. They can collect VAT from multinational companies. They can collect VAT from federal government contracts. So you can say these areas, let federal government collect VAT on them. Then when it comes to state, you say, okay, state, collect VAT on the companies, local companies that are within your state. Collect VAT on individuals and enterprises. Collect VAT on state government contracts. You have solved the problem.
Okay.
So on that area, state government will be collecting VAT within companies that are operating within their state, within the state government contract, within individual and enterprise, and they will be okay with it. The federal government through FIRS will be collecting VAT through cross-border transactions, through federal government contract, through non-resident companies, because if they have involved international taxation, which is under exclusive list.
Okay. Thank you very much, Kennedy Iwundo, tax expert.
Thank you for having me.
Now moving on, oil prices were largely steady on Friday as a rebound in global demand was widely expected, but a slow recovery for the U.S. Gulf Coast export and refining hub from the hurricane earlier this weigh on prices. Brent crude futures were up 22 cents to $73.25 a barrel, while U.S. West Texas Intermediate crude futures were down 5 cents at $69.94 a barrel. Both benchmark oil contracts were largely steady for the week. The move down in the West Texas Intermediate was likely due to traders squaring positions ahead of the U.S. data on oil demand has been curbed as extended power outages are slowing the reopening of refineries. Gold prices eke out small gains on Friday, with investors awaiting the U.S. jobs data to gauge the Federal Reserve plans to start tapering asset purchases. Let's look at price of gold and other commodities on the global market. Now the Nigerian stock market closed on a positive note, closing the week with an appreciation of 8.82%. Investors exchanged 180 million shares valued at 1.7 billion naira in 3,158 deals. Market capitalization rose to 20.4 trillion naira. Transcorp and UAC and Property Development Company were the top gainers for the day. Meanwhile, most stocks across the globe traded cautiously this Friday ahead, mostly in anticipation of U.S. jobs data due later in the day. Neka Oko has update on global stocks.
Hello and welcome to the global market segment. Stocks in Asia were mostly higher on Friday, with Chinese stocks declining over concerns about slowing growth, while Japanese markets surged. The Nikkei 225 in Japan closed 2.05% higher at 28,128.11. The Shanghai Composite dropped 0.43%, while Hong Kong's Hang Seng Index shed 0.72%. European markets were mixed on Friday as investors monitored key economic indicators out of the Eurozone and the US. Germany's DAX hovered around the flat line. London's FTSE added 0.17%, while CAC 40 of France shed 0.33%. U.S. equities were mildly higher in early trading as investors geared up for August jobs report. The Dow Jones Industrial Average rose 42 points, just as S&P 500 and Nasdaq Composite both rose marginally. And in Africa, markets traded mixed in early deals, while South Africa and Ghana underperformed, declining 0.21% and 0.75%. Tunisia, Namibia, and Ghana all posted gains. And that's global markets. I'm Neka Oko.
Now that wraps this edition of Business Express for the week. Remember to keep in touch with us, or do send in your comments, observations and suggestions. Also be informed that all previous episodes are available on YouTube on the NT's channel. Join us again next week. I'm Musa Abubakar.